everybody, what's up? What's up? It is Monday, October 18th. I sent out the new issue of MMT Trader. If you want to get a copy of that, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. All right. So I'm back from my Colorado hike. My first 14er, Mount Bierstadt, 14,066 feet. Summited on my second attempt. It was like a blizzard. It was we were engulfed in an intense snowstorm at the summit. I was blind. I couldn't see. My hands were freezing. But I did it. And you know, I made that video on the first day, our first attempt. And that was my fault. Like, you know, I went there with my son. That first day, Wednesday, was a nice day. It was really windy and cold, but the sun was out. And got to about 12,500 feet, and I just, you know, I started freaking out a little bit because I couldn't feel my hands. You know, I've been watching a lot of these Everest expedition videos, and there was this famous expedition in 1996 when I think it was like 8 or 11 people died in one day. And some of the survivors, they have like no hands left and no noses and stuff because of frostbite. I think that psychologically got to me. Of course, they were facing much worse conditions than I was. I mean, they were talking about like minus 60 degrees and, you know, over 100-mile-an-hour winds. Like, I was nowhere near that. But I have to say, that first day, you know, we got to like 12,500 feet, and I just said, you know, I can't feel my hands anymore. I couldn't feel my toes. So we went back down, and then, like I said, I was so bummed out, and I was so pissed off at myself, and you know, being a quitter and all this thing. I made that video, and you know, then the next day I went back and we did it, and it was worse conditions. And that day, the next day on Thursday, you know, we knew what the weather report was going to be. It was calling for snow, but we did it anyway. I just kept trudging on, man. And like I said in my video, it was like compartmentalize, like, you know, when you got to do a big task and when you got to do something that's really hard, you know, break it down into little tiny pieces. You know, I'm going to go the next 10 feet, or I'm going to make it right to that curve in the trail, or whatever it is, if you're in business, or, you know what I'm talking about. Anyway, let's talk about the markets. Look, folks, I think this correction is kind of over. For two reasons. Number one, I think we're going to see bank credit and loan growth really pick up over the next 6 weeks. And the reason why I'm saying that is because, you know, now that Treasury can start selling securities again, selling debt, because they raised the debt limit by $480 billion, that should entail a pretty sizable reserve drain. And again, for those of you who don't understand how this works, you know, the banks don't lend out reserves. I mean, they might lend them overnight to each other to cover, you know, their own reserve requirements. But this is not It's a Wonderful Life, the Jimmy Stewart, Bailey building and loan situation, all right? When these reserves come piling onto bank balance sheets, those are assets that you need a certain amount of capital for the amount of assets you have. And if the reserves come piling on like a tsunami, which is what has been happening, you know, over the last 7 months or longer, then it limits or it impedes the ability to take on other assets such as loans. But when reserve balances come down, it kind of makes some space, some room on bank balance sheets for other assets, and they want to do loans. That's where they make most of their money. So this, the sale of treasuries fundamentally is a reserve drain, okay? It's not borrowing, it's a reserve drain. And now that the debt ceiling has been lifted by $480 billion, you know, that's not going to mean you're going to get 480 billion of reserve drain. No, because don't forget, Treasury's going to keep on spending. So, whatever they drain, they're going to put back in to some extent just from ordinary spending operations. So we're going to see some reserve drain. The Fed is going to, and don't forget in November, what is it? They're meeting November 2nd, 3rd. They're going to announce taper. They're going to start to taper. So they're going to slow down their asset purchases. That'll help a little bit. So we could get a nice boost in credit creation, in loan growth. Check your mailbox. Check your offers coming from your banks. I bet you're going to see it over the next 6 weeks. A new, thrust of solicitations. Hey, you want to borrow more money? So this is going to be supportive for the economy, although the best way to support the economy really is through the fiscal pump, where people get checks and they don't have an offsetting liability, right? When you have a loan, that's great. You get a credit in your checking account, but you also have that loan, that debt that you have to pay off. It's different than government money, which is, hey, here's my stimulus check or here's my Social Security check, free and clear. Boom, that's money in my pocket. That is an increase in my net worth, all else equal, okay? So that's factor number one. I think we're going to get a boost in credit creation. That's going to help. And, a lot of this is still temporary because the debt ceiling deal was only until December 3rd. All right, we're going to be right back in this mess right around this December 3rd when Congress is going to have to, come up with a solution again. They're going to have to either raise it or suspend it or default. We're going to be right back in here. But over the next 6 weeks, I think it could be good. Number two, I am seeing actually a little bit of a pickup in the fiscal flows. We're up around, I think, 20.5 billion per day. That is about the highest daily flow. I got to go back and look, but probably like in about 3 weeks. All right, so it is picking up a little bit because we were running really low. We were running like 16.5 billion a day. But the 20.5 billion a day, what's that? That's like 410 billion a month. That's kind of like, that's where I said that's the pre-pandemic level. We're leveling out there at that pre-pandemic spending level, which, by the way, is not insignificant. I mean, that was enough over the years to keep the economy and the stock market moving higher with, of course, corrections in the market. I mean, we didn't have really any major corrections or even any, minor corrections in the market since the pandemic stimulus. It was like a straight up freight train because we had, 600 to 900 billion a month in flows. Now we're coming back down to that 400 billion a month in flows. So you're going to get this normal back and forth market action, but that's like a 2.5 to 3.5% GDP growth rate. So credit creation, flows are stabilizing. Now there's one factor that's coming up. I mentioned it. That is the Fed meeting on November 3rd, where they're going to announce taper. And of course, you're going to get the zombie. I'm telling you this right now in advance. You're going to get that zombie hyper volatility reaction. But I think, that could be one of these buy the rumors, sell the news type of events. In other words, this has been so telegraphed, this taper. Like, I think it is so built into the market right now that when the Fed actually does announce this, and by the way, the surprise would be if it says, hey, we're going to hold off on the taper. I mean, people will go nuts on that. But even if they say, okay, we're going ahead with this taper, I think you're going to get a bullish market reaction, particularly in the bond market, because, wow, I mean, you got to read my report today, because the numbers in the bond market right now, I mean, you have like record or near record short positions on the part of institutional asset managers and small speculators shorting treasuries. By the way, the banks have been buying, like over the last several weeks, they've been heavy buyers of cash treasuries. That's in the Fed's data that I saw. But man, you have the potential here for a massive, massive treasury rally. Not to mention the fact that treasury issuance, even with this increase in the debt ceiling, treasury issuance is going to fall this year, this fiscal year. So you're going to have a tightening up of supply. So yeah, you got, I mean, potentially a pretty explosive situation in the bond market. And by explosive, I mean in a bullish way, in a contrarian way. So we'll have to see how that plays out. But so I think the market is going to head back up from here. You know, not a crazy rally, but I think for now, most of the downside is done. We're going to have to look after December 3rd, or, you know, whatever they come up with in terms of, you know, they still need a budget, right? I mean, we're operating on this continuing resolution, which also expires December 3rd. So they have to come up with a full year budget. So we'll see what happens. Anyway, that's it for today. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. I'm the only one who has an applied approach to MMT. Take the concepts and understandings of MMT, and I show you how to use them to invest and make money. All right, everybody. Bye.